forgot the symbols. I forgot what they were. I don't want to even remember until my broker calls me and tells me they hit the target. So it depends on what you are. That's what I think people have to understand. A lot of folks get in the market and say, I'm going to be a long-term investor in the market, and the stock goes down 20%, they take a loss, right? So if you define who you are in terms of what your objectives are, again, if you're a trader and you want to take momentum, you've got to take advantage of this. You really have to take advantage of this move right now. If you're a longer-term investor, sit on some more cash. You don't need to try to capitalize on every bear market bounce because you're not going to be able to. You don't have the wherewithal to. But you really should buy any early weakness in 2023.
All right, let's get into the numbers now. We got the unemployment numbers coming out in a minute and a half. Dagan McDowell, jump in here. What's most important to you that you're going to be focused on? We've got the estimates, 200,000 jobs, 3.7% unemployment rate. You're looking at wages, you're looking at the participation rate, or something else?
I'm watching the unemployment rate. It's expected to come in at 3.7%. Remember, Joe Livorna said that unemployment rate from the low, when it goes up half of 1% percentage point or 0.5 from the low, that's recession. Stephanie Pomboy told me yesterday, in the 7 months since the Federal Reserve started tightening through October, household employment in the unemployment rate survey has shown 1.58 million fewer jobs than the payroll survey. That's what I'm watching, because it's unprecedented. There's this gap between the employer survey and the household survey so far this year.
Yeah, it's great to see that, and also this situation around growth. Another thing that Joe Livorna said yesterday was what you're seeing in terms of growth and retail is largely the export story. So you've got to really peel back the onion to understand what's going on in this economy. We are seeing a serious weakening. Again, the numbers are going to be out momentarily. We've got a market that is trading down going into the numbers. Dow Industrials right now down 70, the S&P down 6, and the Nasdaq down 29 as the November jobs report is about to hit. 3.7% unemployment rate is what we're expecting on 200,000 jobs created. Cheryl Casoni's watching this market worsen going into the numbers. Cheryl, your thoughts?
It is. So we came in at 263,000 jobs. 263,000 jobs. That is well above the estimate for 200,000. As for the rate, that stayed the same, 3.7%. That came in as estimates told us that was going to come in at 3.7%. That is the rate. 263,000 jobs added, stronger than expected. The estimate was 200. Government jobs, 42,000 government jobs coming in. Private sector jobs, 221,000 jobs. That is higher than the estimate of 190,000. Factory jobs, 14,000. As private sector, I gave you unemployment rate. Yep, again, going into a few more things here. As you look at the work week and the wages, which I know a lot of people are looking at, the work week. 34.4 hours, that is the average work week, 34.4, that's just a little bit weaker than expected. Going through some of the average things here, it looks like, as far as I'm digging into the wages, hourly earnings, I'm sorry, what was that, 5.1? Okay, that's actually a decent number, guys. Thank you. Average earnings year over year, 5.1%. The estimate was for 4.6%. Let me give you the rest of these now. Going through, I gave you private payrolls. Average earnings, the month-to-month number, the estimate was 0.3%. This came in at 0.6%. 0.6%. The reason I'm saying this is good is because, honestly, that's consumer spending. So when you're seeing wages jump a little bit, that's a kind of a good hit for the economy, if you will. Again, average earnings year over year, 5.1%. The estimate was 4.6%. Down to labor force participation. That came in at 62.1. Labor force participation coming in 62.1. Let me get into the report and give you exactly what the government is saying led to this stronger than expected jobs report. Looks like, I'm not surprised by this, notable gains, leisure and hospitality. We've been talking about that this week, guys. Healthcare, and then government jobs. The government jobs is interesting, and again, that was stronger than expectations, because some folks have been saying that the government's playing COVID catch-up when it comes to hiring. As far as other numbers within here, let me get into some of the sectors and what they're saying. There's revisions now crossing right now. Revisions. 23,000 fewer jobs were created than previously reported. So they did revisions for September and October. Those numbers revised slightly down, if you will. Okay, let me get into these numbers. Leisure and hospitality, that was 88,000 jobs for the month of November. 62,000 of that was food services and drinking places. And then if you go through and look at some of the other jobs overall, we are now still below pre-pandemic levels for leisure and hospitality, but still that is strong. Healthcare, that was 45,000. Ambulatory healthcare services, 23,000. Hospitals, 11,000. And then nursing home care facilities, 10,000. But again, looking at some strong numbers here, I'll send it back to y'all for reaction. I'm going to keep going through the report. It's a massive report. I got to go through some other numbers here, but I do want to get in, again, as the market where it trades down, 465. I'll let y'all analyze that one right now.
Well, it's very simple here. You got a good jobs report for American workers, but that's bad news for markets because it may very well change the scope of the Federal Reserve and its plans to pull it in. So if we're looking at a market that's down 417 points right now, clearly market participants are now questioning whether or not the Fed is going to start pulling it in and slowing down the aggressive rate hikes that we're seeing. And joining us now to break it all down is ZipRecruiter Chief Economist Julia Pollack, EmployBridge Chief Workforce Analyst and American Staffing Association Vice Chair Joni Biley, and LaSalle Network founder and CEO Tom Gimbo. Making Money host Charles Payne with us this morning, along with Heritage Foundation economist and former Trump economic advisor Steve Moore, and of course all morning long is David McDowell and Chris Markowski. We have all hands on deck. Julia, let me start with you. Get your take on these numbers. A good report, 263,000 jobs created with the unemployment holding at 3.7%. Markets down 400. Your thoughts?
So I thought the risk this month was to the upside because of that strong boost to personal income and to spending that we saw in October. The labor market is still being propped up by recovery in many industries that are still well below pre-pandemic strength, and the consumer is still holding strong.
The consumer is still holding strong, Joni, and we're looking at a number of sectors actually create new opportunities. Where are you seeing the jobs right now, Joni?
You know, most of the jobs, Maria, they continue to be in the healthcare sector.